Hello and welcome to Clear to Close with Vern Larson. I am Ben Kaysen here with the man, the myth, the legend, Vern Larson, the mortgage guru. Vern, how you doing?
Really good, really good. Day after St. Patrick's Day. Welcome. Woo. Yeah.
Day after St. Patrick's Day, Vern's
feeling
here.
Good. Yeah.
Love to see it.
Today I have coffee instead of water, Ben.
Hey, that's
Don't
good
ask.
to hear. Don't ask. And we have another bombshell guest. We continue to just get these massive guests for the show. We've got Dawna Trujillo from Advantage Home Mortgage. Dawna, how you doing?
I'm good. Thank you so much.
Absolutely. You know, I'm so excited to talk to you guys both of you experts in your field, huge parts of Advantage Home Mortgage, to talk about the types of loans. So for guys like me, I don't know a ton about types of loans. So let's just kind of break into it, guys. Why are there different types of loans? What do they look like?
Yeah, it's every loan has its own, factors that are going to make it. And we want you to get to the very best loan that's best for you. So what I always ask, my first question is if you're VA eligible, right? Mm-hmm. So VA is a really, unique loan type. It's probably the most limited. Okay. So to qualify for a VA loan, what do you have to have, Dawna?
0 down. And you do have to be a veteran.
Yeah.
Oh, gotcha.
A veteran. Yeah. So either active military.
Active, yes.
Yeah. Active military veteran, National Guard, I think it's 6 years, or been in an active,
2 years active.
Right. Deployment.
Yes.
Yes. So you'll know, the veterans will all know if they're eligible for VA loan. But yeah, so you can do 100% financing, like she said, 0 down and no mortgage insurance. So it is huge. It's one of the very best loan types out there. So
absolutely.
If you are eligible for VA, do not let anybody talk you out of getting that loan. But, yeah.
It's the best loan that you can get.
It's the best loan. Yeah.
Gotcha. And what's the benefit of having no down?
Well, other than that, the minimum down would be 3% on a conventional loan or 3.5% down on an FHA loan. So that's a big deal, to have 0 down. You still have closing costs, but 0 down payment and no mortgage insurance on top of that 0 down is
amazing.
Amazing.
Yeah.
Yes.
And then the next level up, you're going to get a really great interest rate with the VA loan. So the government, guarantees your loan if you're a veteran. So if you were to default, they do pay the lender back on your behalf so that the lender gets holding it and doesn't lose any money. So because of that, you're not paying the mortgage insurance. You're getting a great rate because, it's a really limited risk loan for the final investor. So they're offering a little better terms, long term. So that's big picture. But yeah, so if you're VA, definitely, the only way you're ever going to beat out a VA is if you've got a ton of money down conventional and a funding fee. And so, but definitely talk to Dawna. She'll know exactly where to put you if you're in a VA and what questions to ask to make sure on that scenario.
Yeah. So for VA, say I already did a VA loan. I already did one. How many more times can I return to VA as a veteran, or is it just one time?
As long as you have eligibility, it's over and over and over. It's unlimited. So you may have to sell a house, unload, some, and get some eligibility freed up. But yes, it's unlimited. A lot of veterans don't know that. It's crazy. Yeah.
Yeah, that's a great question.
Yeah. So he's very astute, man. He's a good host. He's learned a lot.
I'll slide you my $5 for saying that. Thank you.
So then I'd say the next loan type, let's talk about FHA. So FHA is Federal Housing Administration. Give us a rundown on FHA, Dawna.
FHA is a good program for average to good credit.
Okay.
We can go down as low as 620, more optimally 640, 3.5% down. There is mortgage insurance premium, but it's a great way to get a lot of first-time home buyers into homes.
Right, and they're really easier on the credit than a conventional loan. So if you've had a bankruptcy, if you're 2 years out of a bankruptcy, we can do it. If you're 3 years out of a foreclosure, 2 years on a really crazy circumstance out of a foreclosure, we can get you an FHA loan. So that 620 credit score, that brings a lot of people in. Technically, conventional says they can do 620s, but it has to get through an automated system and it has to get approved. And it's
not guaranteed.
The automated system's going to probably call you out and not let you do that.
Exactly.
And so if you have weird stuff on your credit report, and there's a lot of people that have weird stuff, I got divorced, my husband let the house go, it was his house, blah, 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 blah. You know what I mean? It still shows up on my credit, looks bad on me, is pulling my score down. I cannot get an automated approval. I can't even get an automated approval on an FHA loan. So FHA allows us to bring a real person in. Like it allows us to bring the underwriter in and do what's called a manual underwrite. So the underwriter can open it up and look and go, okay, I see what happened. You got divorced. This isn't really yours. The courts ordered it to that person to pay.
Yeah.
You know, you weren't really responsible, but it's on your credit report. You know what? Disregard. And we're going to put a line through that and then qualify you from there. So it's probably our most flexible program for any kind of credit issues you have.
Gotcha. And can I use an FHA loan if I'm getting an investment property?
You cannot. That is only for owner occupieds. So investment, you're not going to be able to use any government, even if you're a VA. You can't
Oh,
use it
interesting.
for investment. Nope. No VA or FHA. Conventional only when you're getting into that investment realm.
Huh. So how do you go about doing that then?
About
Yeah, like if I wanted to say I'm Grant Cardone and Undercover Billionaire and I see Konakai and I'm working on getting this deal done.
Well, first of all, you're not going to call us because we're limited at 4 doors.
Yeah, okay.
So our limit is a 4 unit.
Gotcha.
Okay. And then you're going to want to have a conventional loan. So you're going to have that good credit. So step 1, I would say go back to our original podcast. It was called
Mortgage Minute.
The Mortgage Minute with Vern
yeah.
Larson. Yeah. and we walk through how to do, fix your credit, 5 credit hacks and things like that. So you're going to want that 700 credit score to get some good pricing.
Wow.
Technically investment property is 660, Dawna?
660, but you're not going to get a good rate at
Yeah,
660.
at
You really
660
need good credit for investment properties. I would say 720 and up, really, because that rate, it's very, very credit score driven.
Gotcha.
Yeah. So to finish up with FHA, it's a great program. It's good for that credit, credit builder person. If it's good for that down payment. If you only have 3.5% down, some disadvantages to FHA. So you're going to get a great rate. So that's not a disadvantage, but there is a huge disadvantage on mortgage insurance with that program. What's that?
There's an upfront mortgage insurance premium that is 1.75% of the loan amount, and it's actually financed back into the loan. So
Okay.
You don't have
it's
to
not
bring
a-
it in.
Yeah, it's not an upfront. Well, it is an upfront fee, but it's not payable at closing. And then there's also a big monthly mortgage insurance payment
Premium.
that's also added to the payment. And that is the calculation is 0.85. It's pretty hefty and it never goes away.
Never.
It
So if you put
stays on the loan.
3.5%,
Yes.
it's on there for 30 years.
Oh, wow.
Yeah.
And that adds up a lot over the life of a deal, right?
It does. So it's a good way to get into a home, in 5 to 7 years, which is kind of the average. Well, not lately, but 5 to 7 years, people can, they're either going to sell or they're going to refinance and get
Sure.
out of that loan.
Yep. And so what we're going to do is if you are going into an FHA loan, we're going to coach you. Hey, let's get your credit up. These are things you can do. Why you're in this loan to get your score up. So when you come back through, we can do it conventional. And if you decide to sell, you've got money down, we're going to get you in a conventional loan that way.
Gotcha.
Yeah. So a couple little nuances on that. If you do put 10% down, it will go away after 12 years, the mortgage insurance. But yeah, if you're under 10% down, life of loan.
Oh, wow. Okay. So if, say you were talking to somebody like me who's maybe like early 20s, just buying their first house, would you recommend trying to go down the FHA lane, or are you trying to say, hey, let's try and do conventional, or does it depend on the person?
Every scenario is unique, so we're going to see what you've got to offer. So if you've got a 640, then yeah, that probably we're going to be in an FHA loan. And
Gotcha.
Yeah. All of our programs do allow for gifts right now, but FHA is really good with the gifts, like your boss, anybody established relationship, blood relative can give you money. So we can get that down payment through gift. We can also tie it in with the CHFA. So with your Colorado housing, and Dawna is phenomenal at CHFA. She's actually the one that talked me into it, Ben.
I did.
I did not want to sign up for CHFA.
That was one of the things I said, if I come work there, we need CHFA.
You've got to do this for me.
So then when he saw how beautiful the program was, and he's like, oh, I could do this.
He changed his mind.
Yeah, real quick.
He was like, if you want to do CHFA, call Don. And he's like, oh, wait, never mind.
Never mind. I'll do that too. I got you.
That's awesome.
Yeah, it's the great thing about the mortgage industry is you learn something new every day, and
Every day.
other people have other experiences and can show you things. And Dawna and I know it looks like Dawna can be in this business more than 5 years, but I think she's been in it a couple extra years than that. And so she has a ton of experience and has taught me a lot of things. So she's awesome to work with.
That's awesome.
Yes, I actually sold real estate before I came to the mortgage side. So
Wow.
altogether, it's been 26 years.
So there's not much you haven't seen.
No. Well, I always say that. And then I see something new and I'm like, oh my goodness.
Sure. Just stuff. So you were talking about credit score a lot for FHA versus conventional. Does credit score matter at all for VA?
Yeah, credit score matters on VA. It's very forgiving too. So, 620s. There's some other, there is no technical credit score for VA.
Gotcha.
All right. So we have investor overlays where, we want to see at least a 620 to do a VA, but in the VA guidelines itself, there are no credit score requirements. And it's just a secondary market thing for us. So we have to be able to sell the servicing rights on your loan. And if they want to see a 620, we've got to provide those. But in the true VA guideline, there's no credit score
Gotcha.
requirement. So
Yeah. So if I'm listening to this and I have a house that I really want to buy, but my credit score is like a 560, like what would you say to me? Like what would be my next steps?
well, I mean, there are probably lenders out there that you can find that would do a 560, but your rate's going to be terrible. Your closing costs are going to be super high. I would say, let's come in, let's look at the credit. Let's see what we can do to get your score up to where you're going to get some favorable terms in your position. And if you can't wait, you can't wait. But, a lot of the stuff we can fix credit quick.
Yes.
Yeah. Dawna's an expert. She fixes credit scores all the time, just with simple stuff.
Simple things. Somebody's got a credit card maxed out. You pay that down under, 30-40% of the limit, you could get your score up 20-30 points immediately.
Wow.
Minimum.
Yeah. And she showed me a really neat tool that she submits the credit report into this tool and it spits out what it thinks that it wants to see. It's like blah, 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 do this. And then your score will be here. And it's amazing.
Interesting.
It works really good.
Wow.
So
Yes.
That's awesome. And it's definitely like we talked about it already, Vern, but just readdressing it. Like if you're in that bad spot credit wise and you're hearing these numbers and you're like, well, I'm never going to get a loan. It's not impossible, right?
no, not impossible. It's up to you. Like it's on you. We're going to give you the roadmap. If you want to go down the road, that's up to you,
Sure.
Exactly.
So some people are super motivated, and I've seen ones that have shocked me, where 480 FICO comes in, and I'm like, well, this is what you need to do. I'll see you in a couple years. And 6 months later, boom, they're buying a house, And then I've seen one that's 1 point away. It's like, all we have to do is one thing, like just do this and just never do it.
Just don't have the motivation to do that.
Yeah. So it's all a motivation thing and what you're willing to do.
Gotcha.
So then that pretty much wraps up FHA when you say.
Yes.
Yeah. So then we have conventional.
Yep.
All right. So conventional is a little more stringent on your credit stuff. Okay. So hard in stone on foreclosure, 7 years. So if you've lost a house, do not even call about a conventional loan.
Gotcha.
All
So
right?
7 years after you've lost a house.
Yes. Yeah.
Okay.
And back a while ago, in like 11, 12, it was kind of like in vogue to foreclose because everybody was doing it, and there was a lot of foreclosures. So those are getting right,
Yeah.
most of those are done. It takes at least a year after you think your foreclosure is for it to be the real, what we use.
Wow.
So we go off the public trustee's deed. So
Cool.
you can go back on your county records and look at that. So 7 years. Bankruptcy. The printed guidelines are 4 years, okay? But again, there are no manual underwrites in conventional. So you've got to have an underwriter approval, automated approval.
Yeah.
And so it really doesn't like bankruptcies. That 4 to 7 years, you're going to have what we call like a compensating factor. So maybe you've got, a big retirement that you can tap into that would show reserves.
Gotcha.
Something like that, a really low debt to income ratio. You're making a lot of money, but you don't have much outflow. Something, along those lines, usually to offset that bankruptcy.
Would you
when you go
consider,
conventional.
you mentioned like gift, would you consider a gift one of those kind of things?
Yeah, down payment, loan to value is also, huge. So if you're borrowing 40% or 60% of what the house is worth, it's going to love that, It's going to definitely be like, all right, cool. Yeah, worst case scenario, no big deal.
Sure.
Yeah.
I think one thing people don't know about bankruptcy too is it takes 10 years to fall off credit. So it'll show on your credit for a full 10 years.
Wow.
And I don't know where the 7-year thing came in on that, because everybody thinks 7 years, but it's really not. Yeah, it's 10. So maybe their early lending guidelines were 7 years.
Maybe.
And that's why people thought that. But yeah, it shows up on your credit for 10 years. So
Gotcha.
we're going to know about it.
So if you do have that and you've maybe recovered in the last couple of years, you would more say, hey, FHA might be a better fit.
Might be, yeah. If it's 4 years, we'll definitely run it conventional if that's the best option for you. But then you've got to be willing to pivot if we can't get it approved. You know what I mean? Yeah, we tried. We ran it. It doesn't like you. It's an automated system. Don't take it personal. You know? It's not me and Dawna. It's the big mystical Oz in the clouds somewhere.
We will try our hardest to get those automated approvals. There's been times where we're just like sitting in there racking our brains, just what can we do? What can we, what can we add? What can we, take away? And
if I pay this off, if, we have them put an extra $1,000 in the bank, maybe we put a spouse on there, or we put a dad on there, or something like a co-signer of some sorts, or, we're not going to give up. We're going to try try to exhaust every option we have. But yeah, once you get that automated of approval conventional, you're good to go.
Yeah.
So the best thing you're going to have there is if you don't put down the full 20%, you are going to have mortgage insurance, but it is going to go away once you reach 78% loan to value. So no sooner than 3 years. Okay. So once it goes on there, after you've paid it down to 78% of the original balance, you can ask the servicer to remove it. You have to prove the value. There's some little steps there to get that done. And we're not just here at the point of sale. Afterwards, if you have questions on that, Dawna and I can both help you get that done if you're ready to make that step. If you have the 20% down right out of the gate, no mortgage insurance. Saves you a ton of money. Yeah.
But the better your credit is and the more you put down, the less that mortgage insurance is.
Gotcha.
Unconventional.
Yeah, at every 5% it breaks. Difference. So at 97, there's a break. At 95, there's a break. At 90, 85, and then 80% none at the beginning.
Gotcha.
So those 3% down conventionals are pretty tight on.
Yes, on approvals.
Yeah, they really want to see some good factors.
Gotcha.
They want your...
Because they're taking a risk.
Yeah. They're basically loaning you the full Monty. So they want to see, your debt to income ratio probably under, I'm seeing like 43% most of the time. What do you think on the debt to income?
45 at the very high. I mean, even
45
if it's
at the very highest.
44.99.
They're not going to pull it.
Once you get over that, then
it's going to kick it.
Gotcha.
Get an approval.
And it kind of likes to see 1 month reserve. So whatever your new house payment is, so if your payment's $1,000, if we can show after your down payment and everything that you still have $1,000 left over, it likes that. But it's common sense if you really think about it. Like, hey, if my refrigerator goes out, I've got enough money to go buy another refrigerator and still make my mortgage payment. Where if I have nothing, and my refrigerator goes out, the refrigerator's pretty. I'm gonna have to get a fridge, so the mortgage payment will just have to wait, and that's kind of what how they look at it. So the more things you have, going for you, the easier it is to get the approvals.
Yeah, cool. So how do like for all of these, like say, I've got a really terrible credit score, but my spouse has a really good credit score, and we have a house that we really want, and we want to figure out a loan. Like, how would that work?
We'd have to just see where you're at. So with your credit score, we have to see how terrible is. Anything under 620, we're not going to want you. So we're going to kick you off. We're going to
rip.
It's going to be like Jason Elam. Boom! Down the road you go. Sorry, man. And then we're going to bring your girlfriend in and say, okay, what does she qualify on her own? And then if that doesn't work, hey, a family member co-sign with her.
Gotcha.
Can we get your score up? What are things we can do?
Cool.
Can you, if she has a car in her name, can you buy her car from her or something? Just like get it set up where it works.
Cool.
So, but yeah, we're creative when it comes to that and getting the right loan for you and figuring it out. So.
Gotcha. And then are there any other types of loans besides these three?
There's a USDA, and we don't really dabble in it too much. It's geographically challenging here.
Oh, interesting.
Yeah, where does it pick up? Like east of 52nd?
It got closer to us, but I don't even know. Honestly, I haven't done one for probably 8-9 years.
It's a government loan, Ben, and there's a lot of restrictions. So there's an income restriction on it. There's a geographic restriction on it. So Yeah.
It's like nothing in the city or
Nothing in
No.
a city
Oh,
or a
wow.
metropolis. Yeah.
Okay.
It's got to be out. And there's a lot of regulations on that program. So,
gotcha.
yeah.
So usually you don't.
We don't do it too much. I think we've closed a couple in 3 years. So
Yeah, I didn't
it's-
do any.
Yeah, I've done a couple, but it's
Nice.
It's a really oddball program, but out there. And then there's non-conventional lending. We don't really dabble in that either. But non-conventional, you'd be like subprime. If it's making a comeback and bank statements and things like that. We don't really go down those roads either. So we're more of a great service, great fees, get you a good loan. Not something that's going to put you at risk later.
Yes.
So.
And you touched base on the Chaffa a little bit.
Yeah.
Okay.
And we did a whole show on Chaffa.
Oh, okay. Oh, good. Okay.
With Brandon.
I think with Brandon Bigstaff.
Yeah, Brandon
Oh,
Blick and
okay.
staff.
Yes.
So
Yeah.
we did a whole Chaffa. So, but 1,000 down with Chaffa, it can go FHA or conventional,
Yes.
depending where you're at. There are some income restrictions, conventional and
VA too.
FHA and VA. Yeah, if you need those closing costs, can't get it any other way. Right now, it's really important to make your offer stick out. You've got to do something. Whether it's, hey, we're going to close you. I'm going to use Advantage, so we're going to close in 20 days. Maybe that's what the seller's sticking point is. Maybe it's I'm willing to do this conventional loan and not worry about anything repair wise. Dawna can get me in a conventional. That's going to be it. I'm going to
Not
do.
needing closing costs paid by a seller
Yeah.
right now. is
I'm
a
gonna
must.
ask my parents for the money for the closing costs versus asking the seller.
Yeah.
That's gonna make my offer stick out. Whatever it is,
Gotcha.
Yeah.
Cool.
Yes.
So
Yeah, and so that's again going back to like you were talking about a lot of the realtors who come in. Like there's so many offers coming in right to different places right now. It's
Right
moving
now,
quick.
yeah.
And so you got to stand out compared to the other offers that you're getting for the house.
Right.
Yes.
And it's just this is a very kind of like secular business. So right now, it's really where the sellers have the advantage right now. So the buyers
Gotcha.
have to make themselves stick out.
Yes.
But it won't be like that forever.
It'll flip at some point.
It'll flip at some point, and then the buyers are going to have the upper hand, and the sellers are going to be.
Trying to make themselves stand out.
Yeah.
Right.
We'll pay your closing.
Yep.
I'll fix it. I'll take an FHA. I'll do anything.
Yeah. So like, say you're on the seller side, and obviously you have experience as a realtor, so you have offers coming in for your house, and you're seeing all these different kinds of loans. Which ones are typically more attractive to a seller?
Conventional.
Conventional.
Yes.
Why is that?
You don't have to do repairs. I mean, if it's something major, if there's, something very dangerous going on with the house or something like that, would raise red flag to any appraiser. But you're not going to have chipping, pilling paint, that kind of condition or a furnace repair or, electrical repair. So they don't have to worry about that.
Gotcha.
The buyer can get in, that easy.
So if a buyer has an FHA or a VA, there's going to be requirements for the seller to get that. to happen.
Sometimes,
There
yeah.
could be, yes.
Yeah, and I'm definitely going to be your advocate if you do need that loan.
Yeah.
I'm going to call that other agent and say, hey, in this price range, we usually don't see any FHA or VA repairs. Are there any broken windows? Are there any exposed wiring? Is there any chipping or peeling paint? These are the things that we need fixed ahead of time. So we're not going to hold up the transaction.
Gotcha.
And don't be afraid to take this offer. And again, we've had it where the buyers are willing to go make the repairs. So they'll say, hey, we will handle any FHA conditions if they come up on the appraisal. So make your offer stick out.
That makes it stand out that way.
Make it stand out. Make it the best you can right now in this market. Why we need to. But I will go to bat for you on a VA or an FHA loan because they're great loans, and I will go to bat with the other agents and
Get it figured out.
tell them why. Yeah. Okay, we're doing FHA and this is why. We have to. They have limited credit or whatever. It was a one-time, event.
Yeah.
They're way past it. It's good. Like this loan's going to close. Don't be afraid to take this offer.
Gotcha.
So I'm always fielding those calls on the weekends and
Yes.
talking to the realtor. So you want to advocate on your side. So you want, Dawna or I in your corner fighting for you if you do have one of those loans.
That's right. And if you're listening to this and you are overwhelmed with all the different types of loans, like, do you have to choose this yourself, or how much are you guys going to be helping them choose?
We're going to help you a lot. Yeah, we're gonna put you down the road that is
We'll
going to
show
work.
you your options.
Yes.
Good.
And then,
Once you see the options, you're gonna be like, okay.
Exactly, yes.
And these guys do such a good job. Like just even sitting here with you guys both, you do a good job of explaining the pros and the cons of everything. And, obviously all the stuff we've done together, Vern, like you're really good at explaining stuff. So if you're intimidated by this process and this might hold you back, don't be too intimidated.
No.
Or don't be intimidated at all.
Don't be at all. Yeah. Come down, have a cup of coffee with us. We'll sit with you. We'll run through everything.
Yeah.
Yeah. Dawna's an expert. She'll run you through every program, lots of experiences, help you get your credit where you need to be. So
Yeah. There you go.
we're excited to work with you. How do they get a hold of you, Dawna? What's the best way?
Best way is my cell phone.
You going to give it out?
Always. 719-240-2501. And I'll take a call or a text.
Cool.
Wow. Cool.
And then Vern, give me your
Call the
how to get
office.
it. Call the office.
I can't put my cell phone out there. It's
Too much of a celebrity.
Yeah, these girls, it's just bad idea, Larson. No, just kidding. Call me at the office at 719-546-3100. I'm extension 7, but it does transfer through to my cell phone. So I will answer typically 8 to 8. So give me a call and stop by and see us.
Yes.
Perfect. And then one more thing. So if we've talked a lot about pre-quals before, pre-qualifications before you go look at houses, is this something that you need to figure out before that, or is this after you figure out a house and make an offer?
You're going to want to figure this out for your offer.
Gotcha.
So we're going to want to know what kind of loan type, what kind of closing costs we need to be asking for. It's super important to get that loan type in there ahead of time so that the real estate agents know. There are houses that straight up won't go FHA or VA.
Wow.
If you're missing carpet, missing doors, stuff like that, really big safety concerns. The conventionals will take it, but the government loans won't. So there'll be certain homes that are just cash and conventional only. And then, so we want to know, and we'll get you on the right track with that. So get your pre-qual figured out before you even talk to a real estate agent.
Gotcha.
First call is here.
Yes. Before you even get on Zillow or Realtor.com, whatever they're looking at, they need to call us first.
Yes.
So they know what to look at.
And what price ranges to be
Yes.
in.
Uh-huh.
And what's really your payment going to be? Because you see the stuff online. It's like $200,000, your payment's $600. Yeah, well, that's an interest only
Yes.
BS loan. You're going to get a real payment with us. You're going to get the taxes, the insurances you have to pay, homeowners and mortgage insurance if you need it, plus your principal and interest. You get a real payment.
Gotcha.
And you won't, this is really what it's going to be. And somebody may tell you something else, but by the end, that's what your payment's going to be.
Yeah.
So.
Yeah. We can't fudge that at all. And
Yeah.
that's the most important thing. When people say, how high can I go? Well, how high do you want your payment? So tell me that first.
Gotcha.
Let's see.
Cool.
Yeah.
Awesome, guys. Hey, thank you so much. Again, that's 546-3100 to get with Advantage Home Mortgage. And then what's yours one more time?
240-2501.
Gotcha. And that's specifically to get to Dawna. And you really want to connect with these two. They both know what they're doing. Thank you guys so much for listening. This has been Clear to Close with Vern Larson. Dawna, thank you so much for coming in. I appreciate
Thank
you.
you so much for having me.
Thanks for coming in. You're not
I
on the
think you're
clock,
about
right?
ready
Did you
to,
punch out for this?
yeah, right.
I'm not paying you to be here.
I'm not paying you to be here.
He does not pay me. He's about ready to be a loan officer, Vern.
I know.
I know. I'm learning a lot in these shows.
Dawna's also our number one recruiter, Ben. So
So be careful. That's what you're saying. No, I'm just kidding. Hey, guys, thank you so much. And thank you so much for listening. This has been Clear to Close with Vern Larson. If you want more of this content, learning about everything you need to know about the process, check out our previous episodes of Clear to Close, as well as our other series, The Mortgage Minute, which is more of kind of layman's terms running through the process. It's a great series as well. So just go check that out if you want to hear more of Vern and his guests talking about what all is going on with the house buying process.
thanks for taking the time, Dawna. We appreciate you.
Thank you so much.
And thank you guys so much for listening. Have a great rest of your day.